Elon Musk, the world's richest man, has recently decided to purchase Twitter for a gigantic $44 billion, vowing a more liberal approach to police content on the social media network, where he promotes his interests, criticizes opponents, and comments on a wide variety of issues to over 83 million followers. Stay tuned to find out everything you need to know about Elon Musk and if he has broken any laws by buying the popular social media platform. So, was Elon Musk breaking any laws when he was attempting to buy Twitter? Elon Musk's massive Twitter investment took a turn around mid-April, before he even finalized the gigantic purchase, when a complaint was filed alleging that the colorful billionaire illegally delayed revealing his position within Twitter in order to buy additional shares at lower rates. Additionally, according to the complaint, Musk didn't reveal his Twitter investment until he had nearly doubled it to more than 9%. The lawsuit claims that this situation harmed much less wealthy investors who sold their shares in the online social business in the 2 weeks before Musk revealed he owned a significant position. According to regulatory records, Musk purchased a little more than 620,000 shares at around $36 and continued to buy more shares on practically every trading day until April 1, 2022. Musk, who is most well known as the CEO of the popular electric car company Tesla, had 73.1 million Twitter shares, which equates to a 9.1% ownership share in Twitter. According to the lawsuit, Musk's Twitter position had hit a 5% threshold by March 14th, requiring him to publicly declare his interests by March 24th under U.S. securities law. However, Musk waited until April 4th to make the mandatory disclosure. According to a lawsuit which was lodged on behalf of an investor named Mark Bain-Resella, Musk's improperly delayed disclosure caused Twitter's stock to soar a huge 27% from its April 1st close to $50 by the end of April 4th, depriving investors who happened to sell their shares before Musk's improperly delayed disclosure the opportunity to realize significant gains. Making it worse, Musk was able to continue buying shares at prices ranging from $37.69 to $40.96. The complaint is attempting to be certified as a class action on behalf of Twitter shareholders who bought stocks within the company between March 24th and April 4th. Musk paid a huge fortune, to be exact $2.6 billion buying Twitter stock, a small portion of his estimated $265 billion fortune. Musk said in a regulatory filing that he may boost his investment after pulling out of a deal to join Twitter's board of directors last week. Since 2018, when Musk and Tesla agreed to pay a $40 million fine to settle claims that he exploited his Twitter account to mislead investors about a prospective buyout of the electric car firm that never materialized, the SEC and Musk have been battling in court. Musk was expected to get legal approval for his tweets about material that could affect Tesla's stock price as part of that contract. So, as you can see, Musk has been in this kind of trouble before. This is nothing new for the billionaire. Now, everything you need to know about Elon Musk and his purchase of Twitter. So, here's everything you need to know about the billionaire's very recent purchase of the popular social media, Twitter. Elon Musk bought Twitter for $44 billion this past Monday, giving him control of a highly powerful social media site that acts as a forum for political leaders, a sounding board for specialists across industries, and an information hub for millions of regular users. The acquisition came after weeks of Tesla CEO Elon Musk preaching about the need of free expression, citing Twitter's position as the de facto town square and taking issue with content moderation measures that he sees as a step towards censorship. He regards Twitter as critical to the operation of democracy, and he claims that the economics are unimportant. The fact that Musk now owns Twitter gives him huge control over immensely important societal and political concerns, probably most notably the permanent ban on former President Donald Trump that the site imposed in response to the Capitol riot on January 6, 2021. Twitter will become a private corporation under the terms of the agreement, with stockholders receiving $54.20 per share. The transaction is likely to be completed this year. Musk's Twitter transaction adds to his portfolio, which already includes rocket business SpaceX, which aspires to land on Mars, and car maker Tesla, which pioneered electric vehicles. However, Musk's views on free speech and how to regulate the site have put him at war with Twitter's present leadership, raising questions about how he will implement his ideas and whether they will have an impact on the company's current management team. Musk has stated that he will open up Twitter's algorithm, allowing users to see how content moderation choices are made, while several researchers have stated that this will be difficult. He's also advocated for basic, widely accepted reforms like introducing an edit button and promising to eradicate spam bots. He's also stated that he wants to expand Twitter's verification procedure to include more users, making it easier to identify the legitimacy of accounts. accounts. Musk's Twitter ownership began drama on April 4th when he stunned investors by revealing he had purchased a more than 9% stake in the company. Musk was offered a board position by Twitter, which was disclosed the next day. A few days later, Musk resigned from his position. Musk stated his intention to attempt a hostile takeover of the company by April 13th, according to financial records. Meanwhile, Musk's offer appeared to be on the verge of being rejected by Twitter. The day after Musk's offer was made public, the board approved a poison pill strategy that would make it much more difficult for the billionaire to buy the company. The method, known as a shareholder rights plan, would allow investors to purchase Twitter stock at a discount that Musk would not be able to get. The influx of new shares might make Musk's purchase of the firm excessively expensive. Musk then went public with his financing, revealing last week that he had acquired $46.5 billion in bank loans, notably from Morgan Stanley, as well as his own money. So, as you can see, there was no stopping Musk and his mission to buy the popular social media platform. Next, Tesla stock plummeting following Musk purchasing Twitter. In other very similar news, Elon Musk's bid to buy Twitter spelled bad news for his electric vehicle business Tesla, which saw its stock drop 12.12% overnight, wiping $40 billion, or 56 billion Australian dollars, off the world's richest person's worth. Tesla's spectacular plunge was one of the worst performing stocks on the US market, with the car maker's value plummeting by around $126 billion, or 177 billion Australian dollars, with investors fearing he could sell his shares to pay the $44 billion, or Australian $61.4 billion purchase of the social media giant. Musk currently owns a 17.5% interest in Tesla, and the $40 billion, or 56 billion Australian dollar knock on his wealth is nearly double the amount of equity he pledged in the Twitter deal. Investors used to love Tesla, but the stock has taken a beating in recent weeks due to concerns about rising interest rates affecting future profitability. Since Musk announced his intention to buy Twitter in early April, the company's valuation has plummeted by $275 billion. That's 385 billion Australian dollars. Investors may be apprehensive since he's provided little information on how he plans to fund the 21 billion or 29 billion Australian dollars he has personally guaranteed as part of the deal. Musk is using Tesla shares as collateral for the deal, raising concerns that he may sell some of his holdings, which some experts see as a major risk if the stock continues to fall suddenly. Tesla, according to Arthur Hogan, a chief market strategist at National Securities Corp, has 3 strikes against it. However, Tesla shareholders may be concerned about Musk becoming engaged in yet another time-consuming venture and potentially selling down a portion of his shareholding as a result of the successful Twitter deal. Musk's plan has also been heavily criticized, with fears that basic safeguards would be removed. Elon Musk, according to Angelo Carusone, president of Media Matters for America, a nonprofit media watchdog, will undo a slew of basic protections against harassment, abuse, and disinformation that Twitter had spent years implementing. He claimed it would essentially allow the floodgates of hate and lies and use Twitter's market leadership to persuade other social media businesses to backslide. People should not be deceived by Musk's assertion of freedom of speech, he warned. You can anticipate Donald Trump's account, as well as a slew of other accounts that participated in abuse, harassment, and repeated violations of Twitter's rules, to be restored as a result of this sale. He declared, "The race to the bottom has begun." He continued, "But all hope is not lost. Accountability now rests with Twitter's top advertisers, who need to make it clear that if Twitter becomes a free-for-all of hate, extremism, and disinformation, they will walk." It will certainly be interesting to see what happens with Twitter now that it's under the reins of Musk, and how it will impact his other very prominent companies. Make sure to let us know your thoughts down below. Do you think Elon Musk deserves to be the owner of such a big, influential platform? Do you think it will continue to negatively impact his Tesla company and stock? Let us know in the comments down below. But if you enjoyed today's video, don't forget to like and subscribe so you never miss any of our new and upcoming content. Thanks for watching.